What is the basic difference in investing in stocks and mutual funds?
Yeah, they are two different categories. Of course, it's an investment kind of thing. But share is a particular from a company distributes share according, they raise the money from the shares, a company. Whereas a mutual fund is a collective of all the companies issued shares which they get together. That's why they call it mutual. So it's a kind of fund only, investment point of view. And it's a collection of a lot of good shares which make the fund attractive. So that's a mutual fund.
From this point of view, how would you like to comment on stocks investing and mutual fund investing?
Yeah, risk point of view, yes, shares are more risky because you are investing in one company only. So you have to understand all those aspects of company's profitability. Whereas a mutual fund is a collection of a few companies or a few group of shares where the risk is divided among this. One may do good, one may not. But average it will work out better. So shares may give you 100% return in a year, maybe give minus also. Whereas a mutual fund, it is observed that it varies. In the worst scenario also 5% will be given, whereas maximum you can go to 12 to 15% per annum returns easily.
What is your criteria to select a good mutual fund?
Basically, we have to look into what shares company is buying, where they are investing exactly. So present scenario, if you want to, somebody wants to invest, he has to look at the theme point of view. See, there are large cap funds, mid cap funds and sectorial funds. So one has to choose where he should go for it. Present, if I talk, the theme is like FMCG theme is doing very well. The expected sector is in pharma and IT. So it is one's capability of risk, how much he can take risk and how much time he can wait to turn around. So of course, no doubt, any time large cap fund are the best funds, but it varies. Like today ITC, it was quoting 350 about a year back, now it is 250 or 260. So even those single FMCG may not do well, but when there is a group of FMGC, if you include a Bajaj or HUL and others, then automatically the investment point of view it is a better and the risk is reduced. So I go with the theme, what the theme is expected are going on. So we select the funds according to that.
What are the best mutual funds to invest now?
See, most of the companies, all mutual fund asset management companies, they have various types of funds and they invest in different this thing. So large cap funds always are good. It's a very good always. But in last 1 year we have seen the mid cap and small cap are doing very well. And sectorial, one who can take risk or who can understand the market very well. He work on sectorial funds. Like couple of years, bank sector was doing very well, but today the attraction is not there. So today's, if I say for a new person or who wanted to invest with a very less risk, he should go for large cap funds and he should try to mix up with this thing. And for that also there are funds available like balance fund. And in mutual fund there is a debt fund and equity funds, and the middle category is also balance fund, where balance invest more in equity about 65% and 35% in debt. So the risk is reduced by adopting both. So for a small investor, I would ask them to go, our initial person who want to start with, they can go for the balance fund. And large cap funds are always good. But one has to choose according to asset management company, their past performance. Even fund manager matters sometime. Even the change of fund manager also makes a difference. Sometime the expense ratio also makes a big difference in their returns. So presently if you are talking, I find ICICI, AMC, Aditya Birla group of companies, Aditya Birla, Sun Life, then Franklin India, those are the good asset management companies who take care of the investors.
Do you mean to say all their schemes are good?
Not all schemes. Again, depend. You have to go for find out exactly how was the past performance of that particular thing. Like if I say mid cap, they are doing good with HDFC. Mid cap is doing very well. But if you see some other companies, mid cap may not be doing very well. So sometimes you have to see the details of those funds where they are investing, where the fund manager is interested. If I compare a UTI mid cap and HDFC mid cap, both are mid cap. They may be having 70 to 75% the same kind of shares, but still the returns are different. Good returns are given by HDFC because they have been proven for a long time. They started a fund in 2007, so it's doing very well. So again, you have to look at it, the past performance, the fund manager, those things do matter for good returns.
Who are your favorite fund managers?
Basically, I go with the individual fund rather than manager because I have invested in most of the asset managed companies. So there's a Mr. Patil from ABCL, well known. Naren is from ICICI, is well known people. Then Mobius is there from Franklin. So they are good men, but they have a little control over there. They guide their individual fund manager how to work on that. But still, you cannot go with a favorite person. You have to look at the fund.
What is your criteria to select the right time to sell a mutual fund?
The right time, one need not be in a hurry. That is very important thing. And when the market or index is up, of course, your mutual fund NAV will be higher. But you have to choose whether higher NAV is better or when volatility is low. So again, it depends at what price you have entered and what price you want to leave. But at least if you earn more than 12%, 12 to 15%, I think that's the best time to shift to another mutual fund. Or if you have money, you can take out money for that.
What average period you suggest for investing in a mutual fund?
Minimum 3 years, and longer is better. But minimum 3 years, so we don't see the results in 1 or 2 years time.
Any other important point you may like to share?
Basically, yes, one has to be what you call is a systematic investment plans are very good idea to invest in mutual funds because every time you cannot control, you can't time the market. It's always better to be steadily invested and not to make a hurry or quick decisions, and don't go with the magazines and informations available on the, many times we get wrong messages through SMS for the funds, so it is not advisable to go for that kind of things.